Good afternoon, everyone. Today is Sunday, Father's Day. Happy Father's Day to all the dads out there. It is June 16th, and this is the end of the week update on the stock market. Mr. Zuber is out on vacation this week, hopefully enjoying some time with his family on Father's Day. So I'm going to do this solo today. Just be one video today. I just want to do an update on where the market is and show you a few things. Some things that I'm concerned with, but this is a raging bull market. So this is pretty much what happens when you have a secular bull market. The market just keeps going higher, even when you think it won't. It just keeps on going. And that's what happened this week, hitting new all-time highs once again. We'll take a look at some of that in a second. So first off, let me share my screen. And for those that are interested, this is my website. If you want the newsletter, just go to this little box right here, go to breakpointtrading.net and click on the box in the upper right to get the free newsletter. And if you want to subscribe to the $0, you'll get a reminder that the newsletter is available. There's no credit card, won't ask for a credit card. We don't share emails, anything like that. If you want all of the content, you can sign up for the monthly and get a 7-day free trial just to check it out. Or then you can also sign up for the $99 annual subscription that will give you everything. Lots of that I'll show you today, but there's a lot more out there too. So IBD right now is still showing market and confirmed uptrend. Exposure is 80 to 100% exposed. So again, raging bull market. First, let me show you from Stock Trader's Almanac. Take a look at what the performance, election year performance going back 74 years to 1950. And that's the solid lines. The dashed lines are where we are right now, or actually where we were as of Wednesday. This is actually a little bit higher as of Friday when the market closed, but it's kind of following what the 75-year trend is, except it's a little ahead of it. So what does that mean? I don't know. Does that mean we're going to make a similar downtrend once we, meet that middle point? Well, we'll see. The Fed meeting was right here on Wednesday. So lots of good things. CPI came in tamer than expected. The Fed did not raise rates, and all of that had the market thinking that rate cuts will definitely come this year. Now, Powell did specifically say there'll only be one rate cut this year, which that would not surprise me. I think it'll be in September, but who knows? He wouldn't give a date for it. Next week, we're right here. This will be Monday. Wednesday is a holiday, so the markets are closed, and then options expire on Friday. And as usually happens with options expiration week, you get max pain event, where market makers would like for options to expire worthless so they don't have to pay out the premium. And what that means is if the market has typically been going up, which it has been, then this week usually acts as the opposite, and it will go down, or won't. Not positive, it will go down. It could continue to go higher. But market makers would like for it to go lower so that some of those options will expire worthless. And that can save them billions of dollars. So we'll see what happens. But options expiration week is often very volatile. This week is a pretty slow week for news, for economic news, as well as earnings. There's not too much happening this week, and then a big holiday right in the middle. So what that means is probably the volume will be low. It'll be easy to push the market around if market makers want to do that. So wouldn't be surprised to see us end lower for the week this week, but we'll see. Before I show you some of the other things that I want to show you, I want to show you this slide right here, which is, I've showed this before. This is basically market cycles. This is the way markets typically work. And this happens on anything that is traded. You'll get an accumulation phase near the bottom, where it is lots of volatility up and down, very hard to figure out a direction because it goes up and then down and up and then down, and finally breaks out. And we get the markup phase. There could be a reaccumulation phase right in the middle of that. And then at the end, there's a distribution phase, which is kind of the same as the accumulation, except the opposite. But it's very volatile. It goes up and down and up and down. Keep that in mind when I show you this next chart. And then once we break out of the bottom of this one, then we get the markdown phase. And there could be a redistribution phase if it's a multi-leg markdown. And we might get something like this in the summer. We'll see. But let me show you what VectorVest looks like. So keep this in mind. And let me show you VectorVest. VectorVest, first of all, looks very red, other than NVIDIA, of course, Broadcom, of course, which also announced the 10-for-1 split. So those are the two that actually moved higher. Banco Macro did pretty well, and Semler Scientific did pretty well last week, also in Skechers. But Broadcom and NVIDIA are the two technology stocks. We're going to talk about technology in a second as well. Take a look over here. So right now, this is all red. The price, the RT, which is the short-term trend, and buy-sell ratio. So the number of buys versus number of sells. Now, keep in mind, VectorVest is tracking 9,280 stocks. That includes everything. That includes small cap, mid cap, large cap. It includes all ETFs. It includes inverse ETFs. It includes everything. Now, the inverse ETFs will offset the regular ETFs, so they kind of cancel each other out. But this is a very broad market, so it definitely will not look the same as if you're just tracking the Magnificent Seven, for instance, or maybe even the NASDAQ 100, which is only 100 stocks. This is 9,000 stocks. But it's a very broad view of what the market is doing. And what you'll notice here is it is in a confirmed down signal right now with lots of red. So let me show you the charts for that. And I've actually put them on the website. On the portfolios page, there's a little button on the right over here called VectorVest Signals. Now, I will only update these once a week. So if you want the live daily signals, you'd have to have a subscription to VectorVest for that. But this is the DEW, which is the medium-term signal. And I put a definition of what this is over here. It's the detrended price oscillator, which is this blue panel. It's the envelopes, which basically envelopes that surround the price, and then the weighted moving average, which is the yellow line right here. And the signal is driven by the weighted moving average and the detrended price oscillator. And you'll notice that it on Friday gave a down signal because both of these went below their respective signal lines. 30-day up here and detrended price oscillator down here. Now, what I want you to notice is how often this has happened. So I send an alert out when this happens to subscribers, annual and monthly subscribers. And I put, the last time we got the down signal, I put a note there, and also with this last up signal, which was only on Wednesday, I put a note that said I'm concerned about how often this is happening. Because this signal does not happen very often. It's usually once every 6 months or so. It's the medium term. The confirmed signals that are down here are usually much longer. This is happening a lot right now. So take a look at that pattern right there after this uptrend and compare it to what I showed you here, this pattern right here. Looks kind of similar. Does this mean that we might be in this phase? That's kind of what it looks like to me. So looks like that we're going along some distribution right through here. Now, the reason that this gives signals like this is because the market is just basically going sideways in a very tight channel. So it bounces back and forth above and below this 30-day weighted moving average, which causes the signals to change very quickly. If we look at the confirm calls, which is a much longer trigger or signal, usually, again, these usually last for quite a while, usually a year sometimes. But you can see right here, ever since basically about 6 months ago, we got a down and we got an up. Then about a month later, we got a down, and 6 weeks later, we got an up, and now we have another down. We're currently in that down signal. So all of these are signaling that the market is trying to find direction, doesn't really know what to do, just going sideways. We had the CPI number, So, and the market, the NASDAQ 100 took off, and I'm going to show you that in a second, technology in particular, but nobody else participated. So let's take a look at that on this right here. This is a 10-minute chart. And I showed this on Wednesday last week as well. And this is something that I keep up on my screen every day. It updates every 15 seconds. So I can just click over and refer to this to see how it's looking. But what you'll notice, so this goes back for 1 week. So I'll scroll this one back. You can see this is where it started. That red dotted line up here basically is the open from Monday. So if we go back and just follow that red line over, and that's also true of all of the sectors down below that. They all have red lines as well. Those are the opens for all of these from Monday. So this is Monday's open. You can see the S&P with a good CPI number on Wednesday gapped up and pretty much stayed up, came down a little bit, went down on Thursday and right back up again, went down on Friday, right back up again. So it's just trading in a channel, sideways channel, similar to what we just looked at on VectorVest, except this is only a 10-minute chart. Now, this is the S&P. So the S&P had a really good run the last 3 days. Here's technology. And notice where it is compared to its Monday open. Well above the Monday open. And these sectors, by the way, these charts are based on a relative view of how they're doing versus the S&P. So versus the S&P that's up above. If they are above this line, that means they are outperforming the S&P. So technology clearly, which makes up 30% of the S&P, technology clearly has been outperforming the S&P. But look at all the other sectors. Every one of these. Financials below the Monday open. Discretionary, which is a aggressive sector, below the Monday open. Even communication services, which is the internet stocks. That includes Google, Netflix, and Meta. That is below Monday's open. Industrials, healthcare, staples, energy, utilities, materials. Every single one was below Monday's open, except for technology. So what that's telling me is technology is the only sector that's keeping this market going. And in fact, I would say within technology, the large cap technology is what's keeping this market going. So I'll show you something in the charts page over here. If we go down on the left-hand side and look at sentiment in the sentiment section and look at the 50 and 200-day moving average analysis. And we'll look at this for the NASDAQ 100. Because remember, I said the NASDAQ 100 is only 100 stocks, where VectorVest is 9,000 stocks. So what this will show you is, make this a little bigger. So we've got the NASDAQ 100 right here. You can see how it's making new highs, continuing to go higher. All of the momentum indicators are very positive and continuing to go higher. But if we look at down here, so the blue panel right here is the percentage of stocks of the NASDAQ 100 that are above their 20-day moving average. The pink line across here is the 50% point. So right now, and you can see the numbers right here, 51% of all the 100 stocks in the NASDAQ 100, only 51% are above the halfway point. Even as the market, the NASDAQ 100 itself, makes new highs. The percentage of stocks above their 50-day moving average is only 55%, a little more than halfway. And the number of stocks above that's 200-day moving average is 62%. And they usually move in this order. The 20-day moves faster than the 50-day, 50-day moves faster than the 200-day. The other thing you might notice, even as we're hitting new highs, is the 20-day has been rolling over the last few days. The 50-day looks like it's just starting to roll over, and the 200-day is definitely rolling over as well. So first off, if we're making new highs like this, we should be seeing the 20-day and the 50-day up like this, like we saw back here in December, the end of the year last year. These were all above the 80% point. That's the red line. all three of these. When we hit the peak here in May, just before a little bit of a downtrend, the 20-day was right at the 80%. The 50-day didn't move much, but the 200-day was right at the 80% as well, and it's come down. The only one that's kind of hung in there is the 50-day moving average. So what this is telling me, again, just confirming what I said before, not only is technology leading everything in the market, but the large cap NASDAQ 100 are leading the technology sector. And even in that 100 stocks, there are only a few large cap stocks that are pushing this index higher. Everything else is just sort of treading water and maybe even moving down a little bit. So what does that mean? Well, doesn't mean anything right now. It means the market's continuing to go higher. Just a bit of a warning sign, something to keep an eye on. You can also look at the what do I want to look at here? McClellan oscillator for the NASDAQ. So this shows you the number of stocks, advancers versus decliners. And if it's above the zero line, that means there's more advancers than there are decliners. You would think that as the NASDAQ hits new highs, new all-time highs, by the way, that there should be more advancers making that happen than decliners. You can see here's the NDX, this is the NASDAQ 100 right down here. And here's the advancers versus decliners coming down significantly. In fact, even making a new low, even as it's making new highs down here. This is the bullish percent index, the number of bulls that are out there. Now that's moving up along with the index, but it's still significantly below and actually showing a negative divergence as well. So this just another warning sign, some of the things that I look for, the internals of the market. What's the market doing inside? If we want to look at all of the NASDAQ chat is an ETF for AI stocks, Magnificent 7 right here. This makes it very clear. Magnificent 7 far and away just has a parabolic move straight up. Yeah, the NASDAQ 100 is also moving up down here, the green line. But Magnificent 7 is far and away from relative performance perspective. And these all start at zero back in the October low. So again, Magnificent 7 are the ones that are leading the market. I have all those right here on this little chart right here, so you can see what each one is doing. And you can see most of them are bullish. Apple has been turning bullish. It still has a long-term bear signal. And as we look at this, and this is updated every single day. So this is as of Friday. So whenever there's a box around it like this, that means that changed that day. So SMCI just changed from bear to bull on Friday. Something that's similar that I just added to the site. And again, this is for annual and monthly subscribers. It's right up here in the header. So it appears on every single page, no matter where you are. The trend model for the indexes. This basically shows you a graphical view of what the trends for each of these major indexes are. So you have the index over here. This is the SPY. S&P Qs is the NASDAQ. There's the Dow, Russell 2000. That's small and mid caps, Magnificent 7, Bitcoin, gold, bonds, 10-year treasury, and the VIX. And the way this works is a short-term trend is I'll show you one in a second. 5-day crossing the 21-day, so that moves faster. Medium term is the 21-day crossing the 50. That moves slower than the short term, but faster than the long term. The long term is the 50-day moving average crossing the 200. So it moves the slowest of all. So one thing you'll notice down here, anything that's in 23, I change it to red, and anything that's in all the way back to 22 has a green symbol. There's only one of those, which is the volatility index. You can see volatility has been down, which is very bullish for the market. So the VIX moves in the opposite direction of the market. It's been down long-term since 2022. The Magnificent 7 has been up long-term since March 13th of 23. And even the medium term goes all the way back to November 13th. So if we look at the chart, all these are over here. You just click on any one of these to look at the chart. we look at the chart, we can see, so the pink is short term, blue is medium term, and red is long term. So if we take a look at that, we see the pink is the short term. So here's where it gave a short term up signal, gave a medium term up signal all the way back here. It almost gave a down and up signal, just kind of went sideways right along this 50-day. So not enough confirmation to get a signal, but it gave it way back here in November. So that's the way that works. Anytime one of these changes, then the color will change. So if this change, if the, let's say the Qs, well, let's look at the Dow, because the Dow has not been following. You can see it right here. The S&P and the Qs have kind of been following each other, but the Dow has not. So you can see the Dow actually gave a short-term down signal on May 28th, even though these were still up. So if we look at the Dow, you can see right here, here's the short-term down signal. Even though the S&P and the NASDAQ are making all new highs, this one is actually pulling back. So the Dow is kind of going the opposite direction of the other ones. Now, if the medium term, you can see on the medium term, that's the blue one here. It still has a little ways to go before it crosses the red, the 50-day. But if that does move down and crosses over the red, then this will get a down arrow and the date that it crosses right here as well. If we look at the Qs, which is the one that's really been screaming higher, this is the raging bull market right here. It's basically made up of the big cap technology stocks. And you can see the short-term and medium-term signals right here will kind of group together, and then it just took off. The long-term signal doesn't even show on this chart. This is a 9-month chart, and the long-term signal is all the way back here in March in 2023. So nearly a year and a half ago. So you can actually use this if you want to play the markets on a medium-term or long-term basis. If you want to play it long-term, you can watch this one here. And when it changes from down to up on the long-term, that's a perfect time, great time to get in. And you'll probably be in for a year or more in many cases. Or you can do the medium-term if you want to, or you can get in when this signal changes and then get out when the medium-term turns bearish. You can use this in many different ways. The other place where I created something like this is on the charts page for sectors. And you can see both of those are in kind of a pink color. So there's a trend model for sectors as well. And it's the same idea. So you can see short-term, medium-term, long-term. The technology sector by far and away has been leading all the other ones. Staples, so these first three are the aggressive sectors. This next three are the defensive sectors. And you can see all except healthcare are red. They're in downtrend, short-term downtrends. If we look at healthcare, healthcare may be actually crossing to a short-term downtrend here soon too. So when that happens, this date will be updated. But you can use this to look at the sectors if you want to figure out which sector to be in. All the long-term trends, though, by the way, are all bullish for every single sector. They're all up. That just shows you the overall long-term strength of the market since all of these changed. And the earliest date we have on these, it looks like January 5th, 23 down here. So back here in 23, August of 23 for financials. That was a long-term signal. Actually, if you look at that, you won't see it on the chart because it's way back here. But there's financials. So financials has actually given a short-term signal back here, tried to make it back above blue, but didn't, and then continued lower. And we're going to get a medium-term signal maybe as early as Monday on that one as well. So just something to keep an eye on and watch things like that. So that's where the market is. I'm a little concerned with how things are looking right now. If you go back to the homepage and all these little charts here, these are available to anybody. You can look at the S&P. S&P is hit all-time highs and pull back a little bit on Friday. So we'll see if options expiration week has anything to say about it. But this could just continue higher. You just don't know. NASDAQ That's the one that's definitely been moving higher. Here's the Dow. You'll see the difference. There's the Dow moving along in this channel. Now it's sitting right in the middle of the channel. And then Bitcoin, interestingly, Bitcoin, here's the halving event for Bitcoin. It actually, if I go back and look at Bitcoin on the trend model, we can see that Bitcoin actually had a short-term bear signal on June 12th. So that was just Wednesday, same day as the CPI number. If you look at Bitcoin on this chart, you can see it right here. So Bitcoin has a short-term down signal right there, and it had one over here too. But if it continues to go down, it'll be a couple of days probably, maybe by the end of the week, Thursday, when it will get a medium-term down signal. It won't get a long-term until this 50-day crosses the 200, till the red one crosses the gray one way down here. So it's got a ways to go for that to happen. But that's one just to keep an eye on if you like Bitcoin. Same with gold. Gold right here had a great run. You can see here, here's where the long-term trend comes in, the red one, where the 50-day crosses the 200 down here. So that would have been the time to, if you wanted to play gold, the short and medium-term cross back here in October, right after the market low in October, and then it gave a long-term signal. So you could have got in here and just had this as a confirming signal, and then ride the whole thing all the way up. It has not. It won't receive a long-term down signal until this red line gets all the way back down here. So that's sometimes the problem with the long-term signals. You have to go through a period of a big downtrend before you actually get the signal. But everyone has a different way of playing it. So gold is right there. 10-year treasury is dropping like a rock. Ever since we actually had a spike in it. And then after the CPI report, it's been dropping like a rock. It now has a medium term, both a short term and a medium term, and it's getting close to a long-term down signal. So treasuries might be headed lower for quite some time. And then the VIX is on here as well. And the VIX, again, below the 200. So it gave a long-term signal way, way back. It's got a medium-term down signal. And, whenever the VIX is down, the market usually is up. So this is one to keep an eye on. If this one gets a short-term up signal, that may be the signal that the market is starting to turn more bearish. So I keep an eye on that one as well. Anyway, that's it. Anyone that's interested in the newsletter, just click this button right here, and the newsletter pops right up. This is last week's economic calendar, has PPI, which came in a little bit weaker. And this is next week, which really retail sales we have next week. We've got a holiday on Wednesday. Initial jobs, there's not too much happening next week. Existing home sales, of course, for all you real estate folks. There was a lot in, there's the VIX right there. There's a lot in this week's newsletter, and I'm not going to go through it, but down at the end, I put in a very interesting article from Real Investment Advice talking about CPI, talking about inflation, showing the components of CPI right there. The fact that there is a 5-month lag in, this is the rent, year-over-year rent, and owner equivalent rent. So you can see that the owner equivalent rent, there's a 5-month delay in that. So that's starting to come down as well. And then a very interesting comment about down at the bottom, whether we are similar to the 70s or not. They contend it is absolutely not like the 70s, and they explain why. There are several fallacies in that argument, and they explain the reasons why it is not like the 70s, and why we probably will not have stagflation. I've commented before on this channel that I think it's more like the 20s than the 70s. So, and everyone hopefully knows how the 20s ended at the end of that decade. And we'll see what happens at the end of this decade, which goes back to my secular bull thesis. And on the homepage right down here, there's what the secular bull chart looks like. You'll notice that a number of these indicators are right near their highs. This is right at the top of the trend line. So this is the point where which should not be surprising to see a pullback. But we have a long way to go before this secular bull market ends. A real long way to go. I mean, it's probably going to run till 2029, 100-year anniversary of the 1929 crash. But that doesn't mean we won't get pullbacks on the way. So we might be due for one here soon. We'll see. The other thing I noticed is as this market has gone up right here, this is the RSI, Relative Strength Index, and it is showing a bearish divergence. You can see the high here. Now, these are monthly charts, so this goes back to 2018. There's 2018. The next high is 2022, 2021, actually. Now 2022, right there. So 4 years right there. And we might be getting ready to make another rollover that will create a third lower high. So again, this is a long-term chart. It takes a while, but this might be giving an indication that this 2029 year could be pretty accurate. So this one is so important that it's right on the main page. Anybody can take a look at that. And anybody can get the newsletter from right there. So anyway, that's it for today. A lot of stuff to cover. There's a lot in the newsletter for those that want to read it all the way through. I'd be amazed if anyone actually reads the whole thing. But give me some comments and ask me some questions if you want. I do read every so often. I will read it and reply to folks. So if you want to add some comments at the bottom of the page, and please like the YouTube page for Zuber. It's his channel, basically. My playlist on his channel. But everyone have a great week. Options expiration week. Opposite George week. We'll see what happens. Market's closed on Wednesday. Don't forget that. And everyone take care. Have a happy Father's Day.